Well, 2019 has been a banner year for the TMX Group. Shares up nearly 60%, handily outperforming the TSX, thanks in part to stronger derivative revenue and cost-cutting measures. But we also know that it has come against a backdrop of weak pipelines for IPOs, as well as a slump in trading revenues. To talk about how he's managing through all these dynamics, we've got Lou Eccleston, Chief Executive Officer at TMX Group, standing by at the TSX Broadcast Center. Lou, thanks so much for being with us. I know that IPOs are not the biggest part of your business, but it's no denying just how disappointing IPOs and additional financings have been in Canada so far this year. How has that impacted you? And broadly for the sector, what do you think is driving that?
Yeah, well, it's certainly been a bit of a challenge for us in terms of overall performance, but you have to break it down a bit because it's not the entire IPO market, and the larger IPOs get a lot of attention, but actually, as I mentioned on our earnings call this morning, we still have a very strong pipeline of IPOs, and actually our IPOs overall, including international and innovation listings IPOs, have still been strong. They're on par with last year. And then you look at us compared with the rest of the world, our peer groups, we're number 2 in international listings again this year, as we have been now for several years. So you've got to take a look at not just the ones that get the headlines, but there's a lot of smaller companies that are having successful IPOs, and they don't get into that issue of what's been the private valuation, what's the public valuation, are they matching or not. So there's still a solid IPO market. That has actually helped, if you look for this quarter that we just announced, Q3, that there's actually been an uptick in financing, secondary financings on the venture exchange. And if you remember, we've been saying now in past quarters that strong IPO pipeline actually leads to secondary financings as markets start to come back. So it's not the entire IPO market, although there's clearly have been some challenges with the larger ones.
I guess my question is, for your business, does it matter if it is one or two larger ones? I mean, GFL was going to be the largest IPO in this country, and it didn't go. To your point, are you able to offset that by getting 15 smaller ones that add up for your business to be the size and scale and importance of one single blockbuster IPO? Yeah. Well, the answer is yes. I mean, one IPO alone is not going to be material in terms of whether we perform well or not, but it's obviously a disappointment to the marketplace. It's a disappointment to the GFL team. So you don't want to see that happen ever, but it's not going to be materially financially to us when that happens, assuming they're isolated cases, but it's a disappointment for the market and for GFL.
So the word IPO is an interesting one, especially since we've seen these high-profile ones south of the border this year, like these tech unicorns, many that have had disappointing performance. You got a lot of venture capitals who they've got big platforms. They sometimes question the IPO process, and even in this country, I mean, we profiled yesterday Coveo, a large Quebec-based company, which is able to tap a lot of private money that allows them to grow without going public. How do you feel, just sort of generally speaking, around the perception around going public these days, Lou?
Well, I think there's no panacea, and I think the private market is robust. It's large. It's growing. It's not going anywhere. That's for sure. It's an important market for us. It's an important market as a pipeline for listings, but also an important market to understand and know and have relationships with the private community, private market community. But on the other side of this, the public market is still much larger. It's still a robust market, and as I said, you just have to be a little bit careful not to paint the entire capital raising market, capital formation market with some larger companies. There's clearly an issue there. There's no doubt about it. And there's an issue that companies have to deal with the longer they wait, the more rounds they have, the higher the valuations they have at a private level. Does the public market accept that or buy into that? But that's a valuation issue. It's not that the entire IPO market is broken, because we are still seeing strong demand, again, from Tel Aviv, from Silicon Valley, from Europe. It's still happening, and we have not dropped off in IPOs this year, even with the challenges of the financing market. But doesn't it strike you as interesting, I mean, that at least for this quarter, one of the ways that you were able to eke out profit growth was controlling what you could
good control in costs. And yet we're talking about a market that's pretty close to an all-time high. And yet the narrative is, big IPOs can't go. There's very little appetite for energy sector financings. It seems to have dried up from the marijuana sector as well. So, I mean, there's a tension there, right? Markets at all-time highs, and yet you're talking about, controlling costs and managing parts of the business that you can. What's going on there?
Well, any company has to make sure their costs are in line with what the revenue is going to be. But you're missing the other part of the story, which is we had, strong double-digit growth, 16 and 70% in derivatives and in Trayport in Europe. So it wasn't just, we didn't, squeak by just on cost cutting. And in fact, it's really controlling your expenses. And when you see that there's a part of your business, like the secondary financing market, which has been the only issue of challenge for us this year, that you want to make sure that the rest of your portfolio is growing as it is, and you manage expenses accordingly. So, you can't ignore the fact that we had 16% growth in derivatives, 70% growth in Trayport, but that was the whole point of why we had to diversify. You have to have a diversified portfolio. You have to have a global business and a global marketplace, and that's what we've done, because of exact issues that you're pointing out, whereas in one of your markets, if there is a challenge, you got to make sure you have revenue streams in other markets.
Since we are talking about IPOs, Saudi Aramco, world's talking about this one. Can you just kind of walk us through, we've asked you about it in the past, but like how much time your team spent over the last couple of years having a dialogue as part of that? They ultimately decided to stay home with the listing?
Yeah. Well, we spent significant time, which we would, but again, we were looking at it from the whole market. As part of their vision program, initially when this started, a couple of years ago now, there were a couple of hundred companies that were going to be coming public. So we were talking about it on a broad scale, and we have major advantages in our marketplace that we wanted to communicate to them. So we spent time on it, but not an inordinate amount of time. And in the past, in the recent past, we haven't spent time on it because obviously they've gone in a different direction. But we still maintain dialogue. We still want to make sure that Saudi Aramco and others around the world understand the benefits of our marketplace. So we talked to thousands of companies, throughout the year. We didn't change policies. We didn't change regulations or change our rule book or anything like that. We just wanted to make sure they knew the advantages of our marketplace, and we do that all over the world.
What were you selling specifically about the advantages for Saudi Aramco listing on the TSX? And were there any sticking points? Were there certain things that that Saudi Aramco wanted to control that were outside of what the TSX typically does? Yeah,
we never had that kind of discussion, and those are things that we talk about with an issuer confidentially anyway, but no, that wasn't the issue. But advantages for our market are the same reason that we see today still, the primary resource market in the world, and now we're building as an innovation market, as I mentioned before. So the idea that we have an international, base on our equity exchanges, 30% of all the trading comes from outside of Canada. When you look at our derivative exchange, 40% of all the volumes come from outside of Canada. So we've got an international base. You've got a marketplace that is very receptive to growth companies and to companies, particularly in the resource sector, and now in the innovation area. So it's a marketplace that understands growth. It looks for growth. That's why the venture exchange itself is so robust and is the base, the main, growth vehicle for young companies around the world. And that's why we get so many international listings.
Lou, thanks a lot. Good to check in with you as always. Lou Eccleston, CEO of TMX Group, joining us from the TSX this morning. We're going to come back, talk